War destroys cities, but builds portfolios. Let's turn global carnage into your personal ATM. For as long as humans have waged war, someone has been there to profit. The business of conflict is as old as civilization itself. From ancient empires to modern superpowers, war and money have always gone hand in hand. And in the modern world, nothing makes money move faster than a breaking news alert about a new war. Let's start with World War I. In 1914, as Europe descended into chaos, American companies saw opportunity. DuPont, the explosives giant, supplied 40% of the shells used by the Allies. Their profits exploded by 950% during the war. Central Leather, a company you've probably never heard of, saw its stock surge 1,300% just by selling boots. When trenches fill with blood, buy ammunition stocks. That's the lesson. But it wasn't just about making money. The war also accelerated industrial innovation, with companies developing new explosives, chemicals, and manufacturing techniques. This industrial boom laid the groundwork for the modern military-industrial complex. The so-called merchants of death became infamous for turning mass slaughter into record profits. The U.S. War Profits Act tried to claw back some of these gains, but billions in corporate taxes were still evaded. War is good for business if you're on the right side of the supply chain. Fast forward to World War II. Hitler's invasion of the Soviet Union was driven by a desperate need for oil. The Caucasus region and Romania's oil fields were strategic targets. Japan's attack on Pearl Harbor aimed to secure Southeast Asia's rubber and oil supplies. The war's outcome hinged on who controlled energy and raw materials. Companies like Standard Oil and Shell profited immensely from wartime demand. The war also saw the rise of new defense contractors who would dominate the post-war era. Boeing, Lockheed, and Northrop Grumman all traced their explosive growth to the demands of total war. The more the world burned, the more their bottom lines soared. But the end of the war didn't mean the end of profits. The Cold War was a golden age for arms manufacturers. Every new missile test, every proxy war meant more contracts, more research grants, and more money flowing into the coffers of defense giants. The military-industrial complex was no longer a conspiracy theory, it was business as usual. Presidents warned about it, but no one could stop it. From the Korean War to Vietnam and countless smaller conflicts, the cycle of spending and profit just kept spinning. In the 21st century, the Iraq War was a gold rush for defense contractors. Halliburton and its subsidiary KBR landed $39.5 billion in reconstruction contracts. Dick Cheney, the former vice president and ex-CEO of Halliburton, collected a $34 million golden parachute. Coincidence? Sure. Their cost-plus contracts billed $45 for laundry per shirt. KBR's profits soared 300%, all funded by taxpayers and fueled by chaos. But the war also created opportunities for private military companies, logistics firms, and intelligence contractors. The privatization of war blurred the lines between government and corporate interests. Blackwater, later rebranded as Academy, became a $10 billion private army, hired to do the dirty work no one wanted to talk about. These private contractors operated in legal gray zones, often with little oversight. And it wasn't just Iraq. The war in Afghanistan created a multi-billion-dollar market for private contractors, from security firms to construction companies. Palantir, the data analytics firm, landed a $3 billion Department of Defense contract for AI targeting systems. Cyber mercenaries now sell zero-day exploits for over $1 million each. War has gone digital, and the profits have followed. Oil is the lifeblood of modern warfare, and the ultimate commodity for profiteers. When Russia invaded Ukraine, oil giants like BP, Shell, and Exxon pocketed $281 billion in profits. Your pain at the pump equals their gain. Sanctions created artificial scarcity, driving oil prices to record highs. $200 oil meant CEO bonuses and record dividends. The war in Ukraine wasn't just a tragedy, it was a bonanza for big oil. Meanwhile, countries like Saudi Arabia and the United Arab Emirates used the chaos to increase their own market share and political influence, showing that in the world of oil, instability is just another opportunity. In the Middle East, defense stocks surge whenever tensions flare. In 2024, when Israel struck Iran, Lockheed Martin shares jumped 3% overnight. Raytheon was up 2%. Uncle Sam spends nearly $900 billion a year on defense, and every new conflict is a payday for the military-industrial complex. Want to ride the wave? Buy the ITA or DAR Defense ETFs when you hear tensions rising on the news. The pattern is so predictable. Wall Street analysts now track geopolitical risk like they track the weather. But let's not forget the arms trade. The global arms trade is dominated by a handful of countries: the United States, Russia, China, France, and Germany. Their clients? Anyone with cash and a cause. From the Middle East to Africa to Southeast Asia, the tools of war are always for sale. The more unstable the world, the better for business. In fact, some of the world's poorest countries spend the highest percentage of their GDP on weapons, often at the expense of health and education. The profits flow to the few, while the many pay the price. Let's talk about the so-called resource curse. Countries rich in oil, minerals, or rare earths often become magnets for conflict. In Nigeria, oil wealth has fueled corruption, insurgency, and foreign intervention. In the Democratic Republic of Congo, the fight for cobalt and other minerals has led to decades of violence. The profits flow to multinational corporations and local warlords, while ordinary people suffer. Even in places like Venezuela, where oil was supposed to bring prosperity, political turmoil and foreign meddling have turned black gold into a curse. Even in peacetime, the threat of war is enough to keep the money flowing. Every year, governments pour trillions into military budgets, research, and procurement. The mere rumor of conflict is enough to send stocks surging. Investors know that fear is profitable. In fact, the global defense industry is one of the few sectors that consistently outperforms the market during times of crisis. Take a look at the South China Sea. As tensions rise between China and its neighbors, defense companies ramp up production of ships, jets, and missiles. The same story plays out in the Taiwan Strait, the Korean Peninsula, and anywhere else the world's superpowers flex their muscles. For every flashpoint, there's a market opportunity. The arms buildup in Asia has sparked a new regional arms race, with countries like Japan, South Korea, and Australia all increasing their military spending. And it's not just big corporations. Hedge funds and day traders scour the news for any sign of instability. Algorithms buy and sell defense and energy stocks in milliseconds, capitalizing on every headline. War isn't just fought on the battlefield, it's traded on the stock exchange. The rise of high-frequency trading means that even minor skirmishes can trigger massive market swings, creating windfalls for those who know how to play the game. Technology has transformed warfare. Drones, cyber attacks, and artificial intelligence are the new frontiers. Companies like Palantir and Raytheon are at the forefront, selling the future of warfare to the highest bidder. The more advanced the weapon, the higher the profit margin. Private investors can even buy shares in companies developing autonomous weapons and surveillance systems. The line between Silicon Valley and the Pentagon has never been blurrier. Tech giants like Google and Amazon are now major defense contractors, supplying cloud computing and AI for military applications. And then there's cyber warfare. State-sponsored hackers, ransomware gangs, and cyber mercenaries all profit from the chaos of modern conflict. Zero-day exploits, stolen data, and digital sabotage are traded like commodities. The new arms race isn't just about bombs, it's about bytes. Cybersecurity firms rake in billions, protecting governments and corporations from digital threats, while the shadowy world of cybercrime continues to grow. But what about the people caught in the crossfire? For every millionaire made on Wall Street, there are millions more displaced, wounded, or killed by conflict. Refugee camps swell, economies collapse, and generations are lost. Yet the money keeps moving, indifferent to the cost. Human suffering is just another line item on the balance sheet. Some say war is inevitable, a part of human nature. Maybe. But it's also a business, a system that rewards those who can turn chaos into cash. As long as there are resources to seize, power to grab, and influence to expand, there will be those ready to profit from war. So, how do you play the blood money game? Step 1. Set Google alerts for words like sanctions, troop movement, and missile strike. Step 2. Hoard defense ETFs like ITA and XR. Step 3, short wheat futures because war means crop shortages. Step 4, sell when politicians declare mission accomplished. It's a formula as old as Wall Street itself. Just remember, every dollar earned comes at a cost someone else pays. Is there a way out? Some hope that renewable energy, diplomacy, and international law can break the cycle. Maybe one day. But for now, the uncomfortable truth remains. War is the ultimate growth stock. So, the next time you see breaking news about a new conflict, remember, someone, somewhere is placing their bets. The only question is, whose side of the trade are you on? War destroys cities, but builds portfolios. And as long as there's money to be made, the business of war will never close. Subscribe for more stories that reveal the dark side of power, profit, and human nature.